The views, comments, and opinions of the following program do not necessarily reflect those of Morris Media Studios, MorrisMediaLive.com, or its affiliates. Listener discretion is advised.
Welcome. First of all, happy Inauguration Day, guys.
Yes.
It was a phenomenal day in America.
History in the making. Oh my gosh.
So I wore my pearls and chucks for
Yes.
today for the inauguration. You read my shirt.
We can read it.
Okay. Welcome to A Girlfriend's Guide to Life podcast. I'm your host, Miesha Shanell. I curated this podcast to ignite the voices of phenomenal Black people doing extraordinary things in the community. My goal is merely to touch, move, and inspire you to live the life that you've been given to live. So come along this journey with me as I show you how to love and live through adversity, and most importantly, how to keep your head up. So with today's topic, I'm going to go straight forward. As a little girl, I used to dream of moments like today, laying in my bed as a little sad little girl that knew that she had the purpose of being great, but just somehow got staggered and didn't get to fulfill a lot of those things. But today I got to see it and witness it.
Man.
It was the most phenomenal time in history for me. I'm not a big politician buff, but I do dab in it. I have been away from it for 4 years because I just refuse to even partake in that foolishness. But I got a whole new belief in my country today. As you know, I'm a fashionista, so I have to talk about the beautiful colors and the array of fashions that I saw from our first, our vice president in her royal purple. I loved her color. It was beautiful. She looked amazing. Wish she would have tightened it up a little, but. And then our Miss First Lady Michelle Obama came through in her royal burgundy fitted with a belt, just hair fly, just phenomenal. Yes. But we got to remember and think about Lady Gaga. She looked stunning, right? I mean, first of all, the fabric, the elegance, the brooch, the mic, beautiful. And J-Lo got whistles. Did y'all see that?
J-Lo was phenomenal herself.
When she walked out, she got whistles. She was awesome. And I have to give a shout out to the Senator Amy Blanchard for that bomb jacket she had, the camel color. It was awesome. But let's not forget Amanda Gorman. The American poet. Girls, kudos to you for coming out looking like Black girl magic in your royal, beautiful yellow jacket adorned with your red crown. You look phenomenal, and your message, amazing. We heard you.
So poised,
thank you.
so confident. Love her.
I had to get that out because I had it in me all day, just undertaken by just joy and happiness. So with enough of that, let's get to the show. So with that, I have very strong beliefs in two things. I believe that if you can build wealth in two ways. That's through home ownership and through business entrepreneurship. Some of us, like a lot of Americans, choose the route of home ownership. But as you know, our generational gap is far past the white American. So I wanted us to be able to buy homes and know what it looked like in order to get a home. So I did some research. And I have a girlfriend.
Girlfriend's guy.
And I'm bringing my girlfriend in, and she's going to help us and teach us how to build generational wealth through home ownership. So the topic is, so you want to buy a house, right?
Yes.
So did you know one of the main drivers of generational wealth in the U.S. is home ownership? Close examination of wealth in U.S. finds evidence of staggering racial discrepancies amongst Blacks and white Americans, as I just spoke of, right? Efforts of Black Americans to build wealth can be traced back through American history. But these efforts have been impeded in a host of ways, beginning with 246 years of chattel slavery, leaving Black people more economically insecure with fewer opportunities for economic ability. With that being said, I brought in, like I said, my girlfriend, my friend. She's a mortgage expert. She's going to discuss key elements on home buying. Shirley Nichols has over 27 years experience, you guys, in the mortgage industry. Mm-hmm. She is currently a mortgage loan originator for Clear Sky Mortgage and Realty. Mm-hmm. She's from Kansas City. She's writer's mother, a member of Jack and Jill. And in her spare time, she sells paparazzi jewelry. Ladies and gentlemen, please welcome my girlfriend, Shirley Nichols, to A Girlfriend's Guide to Life podcast.
Yay! Thank you, Mai.
I love your pearls. Well, they're so pretty.
Thank you.
Chucks and pearls, and we are representing our chucks and our pearls today. Yes. Mm-hmm. So we are adorned in our pearls today.
Yes.
So tell us, with the little information that I did speak of you, you have so much experience. Tell us who Shirley Nichols is.
Yes. Well, first I'd like to say I'm a mother.
Yes, you are.
I'm a mother. I'm a believer. I'm a doer. I'm a worker bee, hustler, and just an all-around believer. And it's better to give than to receive. I love to give. You do. Know? And a lot of people, I think, they get that kind of confused with something tangible.
Yes.
I give you money. I give you gifts. I give you handbags. No. I like to think of giving in a more intangible type of thing. That's and so good. Giving is what I love to do, hence the reason being a mortgage broker. Giving out information, education, and trying to help those who want to buy a house, buy their first or second or third home, and then refinance if they need to after that. So, yeah.
So how did you get into, because we had a conversation. Yes, we know each other, but I got to interview you and really delve deep into your history and your experience. So with that conversation, I found new things about you. So what was inspiring to me. So Tell us, how did you get into mortgage banking?
Yes, of course. So must give it up to my alma mater, University of Missouri, Columbia. Go Mizzou Tigers. Okay.
Hence your red.
Hello. Well, they're actually black and gold, but okay.
There are?
Yeah.
Oh, Kansas City Chiefs.
Yes, the Chiefs. Oh, wait. Did we talk about them for Sunday? Go Chiefs, beat the Bills. Okay. All right. Plug. No. So when I was away at school, my junior year, I just started thinking, wow, what am I really going to do after I get this degree? Okay. And I guess I should say the start of my junior year, we were sitting around talking with girlfriends and, hey, going to the business school, right away. Business, yes. My dad was an entrepreneur. Okay. My mom is full of education. That's what she did from teaching on up to a principal, retiring as a principal. Okay, so got it. That side was education, but my father's side was entrepreneurship. And I was just like, business sounds like the way I want to do these, my life. Okay. So outside of writing. So I went on into the business school at University of Missouri, Columbia. And from there, that's when a bunch of us students got together and were like, hey, what path are you going to take? What path are you going to take? And I got turned on to a scholar program called Inroads. Inroads, back in the day, everyone knew who Inroads was. If you were in the Midwest, you knew what Inroads scholar program was. Okay. You had to intern every summer with a corporation that you would soon hope hopefully get an internship with and lead on to your full-time employment.
Wow, that's awesome.
Absolutely. Yeah. So, and that's how I got started in this whole mortgage business. I went on with Inroads program, and then that led to my internship with a company called Household Finance. And Household Finance, from there, the training begun, and everything about any type of mortgage program I wanted to know just started being developed in me. And so after graduation, I then went on full time with Household Finance, and it was full steam ahead after that. So that's how I got started.
And so now you are, you said that you were wanting to just help people and show people how to become homeowners.
Yes.
You have programs that you said to me early on that you specialize in. What programs are those?
So that's your regular government loans. That's your FHA, your VA loans, and those type of loans are there for the picking. And it used to be, when I first got in the business 27 years ago, it used to be that it was a stigma, oh my gosh, you don't want this government loan. You don't want the FHA or the VA loan. But now times have changed. People are starting to understand those are not bad programs at all. Those are the programs, what I like to think of as your starter programs, or your programs to have because it makes sense.
Yes.
It makes sense for a plethora of reasons. When I talk to first-time home buyers, I often tell them, when I get asked, what am I supposed to do? Where do I start, Shirley? And my first thing is start with your credit.
Yeah.
Start with your credit. You should get all 3 of your credit reports, not just one, but you want Equifax, you want Experian, you want TransUnion. You want all 3 of these reports because what reports on Experian may not report on TransUnion. And if there is a blemish on Experian, the underwriter is still going to see that as a blemish. So you're going to want to make sure the credit is intact. Oftentimes I get those first-time home buyers, potential first-time home buyers, that'll say, yeah, I'm ready for a home. I'm ready to do this. I'm ready to buy. Yes, I got a little money in the bank. My credit's good. Okay, pause. What's on your credit? Oh, I don't owe anyone. I just have a car loan. Have you pulled your credit?
Right.
And then all of a sudden, they pull those 3 credit reports, and it's, oh, you have a collection with cable bill, whatever. You have these student loan payments, right? Okay, so these student loan accounts are an issue. So you do owe someone. Oh, no, Shirley, they're in deferment. Whether they're in deferment or not, or even forbearance, there is still going to be a payment assigned to that balance. And so the underwriter is going to look at that student loan payment as if there was a payment. And what makes it even more crucial is those forbearances, those deferment student loan payments, they often don't have payments assigned to them on the credit report.
Right.
So what happens is Fannie Mae, Freddie Mac, FHA loans, they will assign a payment to it. And it goes like this. Whatever your outstanding balance is with FHA or with, let's say, Fannie Mac, they will assign a 1% payment factor to that balance. So let's just say, oh, your balance is $1,000 or $5,000, and they're going to assign a 1% payment to that $5,000 balance. So now all of a sudden you've got a $50 payment that you have assigned to this balance.
Got it.
So it is very important to understand about this whole myth about student loan payments are in deferment. That's not going to hurt me. Oh, but it is. So you want to make sure that when you pull your credit report, if you see those student loan payments, definitely call the student loan companies and ask them what you need to do to get this rectified, or to get a payment that will show something a little cheaper, $10, $20, whatever it is, So keep in mind that these student loan payments are very important, and that there are going to, if they show up, you owe them. And if they show up, they're going to count against your, what we call debt to income ratio. So when clients, again, they say, oh, I'm ready. I'm sure you are ready, but let's take a look at your credit first. So we're going to look at your credit first. We're going to make sure we get all 3 bureaus. We're going to go through all 3 bureaus and see what's on this one, and this one. And then after all that is done, and we review the credit to see who needs to make a phone call somewhere and get this rectified. After we've done that, then we're going to move on to the cash. What amount of money do you have in the bank? What amount of money do you have in your 401k? There's oftentimes that clients don't, or I should say first-time home buyers don't understand. You can use 401k money. Yes, if you're doing a retirement plan with your company and they allow you to purchase a property and you've got money in there, you can use some of that money for a home for a home purchase.
Okay. That's
or you can get a gift. Gift funds. Gift funds are very prevalent, and you get those gift funds from relatives. So again, there's ways to get assets that you think you may not have, you might have them. And then there's, of course, the VA program. That's a government loan program.
So wait, let's not give them all. I want to do the elements, because you are giving your elements, your key elements. Yes. So I want to make sure that they are following it. So the first one you said, so be prepared, get their credit report.
Yes.
Okay, so pull your credit report.
All 3 credit reports, plural.
And then save money, and then you said now for the down payment assistance, and that's where you are. So you have down payment assistance programs.
Well, so there are some, and I throw caution to the wind a little bit about the down payment assistance programs, because with down payment assistance programs, what you find oftentimes are they're geared toward a certain amount of income levels, a certain location, and certain type, or I should say size of the property, meaning the sales price. So if you're going to buy a property between $100,000 and $300,000, then you're in one category. Or if your income is $70,000 or less, then you're in another category. You know, so those down payment assistance programs, and I say I throw caution to the wind because not all of them may fit what you think that you're looking for. Down payment assistance programs are typically second mortgages or second liens on the property. So you get your first mortgage, and then here comes the down payment assistance. Sometimes they're what we call silent program or silent liens, but more times, often than not, they're going to be a second mortgage. And if you want to refinance your home later on because, I want to expand my home, I see a swimming pool I want to install and purchase and build, and I want to do that, so I need a second mortgage. Or if I want to sell my property one day, that second mortgage, that down payment assistance loan, 9 times out of 10 has to be paid off. Because there's going to be a time frame. Most of the time, these second mortgage or these down payment assistance programs, most of the time they're going to say, you can't do anything with your property for 5 years or 6 years. There's going to be some kind of protocol typically in place if you get those down payment assistance programs. Or worst case scenario, if you really, really need it and the program fund runs out of funds. So that's another, I throw again caution to the wind about the down payment assistance programs. That's why I talk a lot about the government loans, like the FHA, where there's a 3.5% down payment.
Talk about that. Talk about that. The FHA and the 3%.
3.5%. So with FHA, they have a 3.5%. That's their mantra. 3.5% down payment for when you're buying a home. So you don't have to, get into the idea of, well, my mom or my dad said I needed to have 10% down. No. We're going to dispel that myth and tell you, no, you don't have to have 10% down. You don't have to have 20% down. Now, there's a lot of reasons why people want the 10% down or the 20% down, because they're going to get a lower interest rate, or they may not have that pesky little PMI, right? That private mortgage insurance. So then people often say, well, then I need to get 20% down. Well, then you might have to wait a little longer. Or else get a gift funds or use your 401k or retirement plan. But oftentimes, like I say, I'm a big advocate. If you're a first-time home buyer, I might say, think about FHA because it's 3.5% down. Now, not to say there are several conventional loan programs that you can do at 3% down. So there are some programs, if you qualify for them on a conventional level, 3% down is definitely something that you can look into and do.
And then what about VA?
VA, 100% down payment, baby. No money's needed.
That is awesome.
Yes.
They deserve that. They deserve
that. Don't they deserve that?
Yes.
Don't they deserve that?
Yes.
Shouts out to our vets. Shouts out to our veterans.
Thank you for serving our country.
Thank you for your service.
Yes.
So, yes, absolutely. So that 100%, I think a lot of people tend to forget that that's available. That is still flourishing, ongoing. It is what it says, 100% down payment 100% financing. I keep saying down payment. 100% financing. And so even when you have time, when it's time to do the appraisal, you don't even pay for your appraisal up front.
Really?
All of this stuff is rolled into the loan. It's all rolled into the loan. And then, it's just a wonderful, amazing thing to do a VA loan. If you qualify, if you're a vet. And,
what are some qualifications?
A vet.
What about their income?
So now that's another thing too.
So what about their income?
The good thing about if you are a VA recipient or veterinarian, then you also qualify for a higher threshold than most candidates, right? So if we're looking at debt to income ratios anywhere from 43% with conventional on up to maybe 49% with FHA, some VA will allow you to go to 50 or 51%, depending on your lender. So that's good. Absolutely. So
awesome.
Your income stretches a little bit further with VA. Absolutely.
So tell us about what you do as a mortgage broker.
So as a mortgage broker, we do, I should say this, we wear all the hats, okay, right? So, I'm the go-to person, right? So I'm your first step of contact. I'm your point of contact. I'm your go-to girl. You call me up, hey, Shirley, I'm ready to buy. Or, hey, Shirley, I need to refinance because interest rates are so stinking good. I've been in this business almost 30 years. Okay, 27. Yeah. But
that's a long time.
The interest rates, when I got in, we were selling these mortgage loans at double digits.
Wow.
Oh, you got a 10% from me? Your credit was 800, 900. Your assets were through the roof. Oh, you were golden at 10% interest rate. Yeah. Oh, yes. And, before my term came in, people were getting 14% interest rates and were loving it. So to see now that interest rates are all the way down to about 2.25%, 2.375%, 2.5%. Oh my goodness!
I thought it was 3 something. Oh
no,
wow.
Interest rates are under 3%. So if you are talking with the lender that hasn't given you under 3% rate, call me. But yes, absolutely.
You have to give us
so good.
You're funny. You have to give us a shout out. Shout out to your mortgage company.
Yes.
Tell us about
Clear Sky Mortgage and Realty. We are about 10 minutes away from LAX. And the owner of the company is Mortgage Solutions. That is my wonderful broker owner, Alicia Taylor in Las Vegas.
Awesome.
And yes, and her knowledge supersedes me. So if you don't get in touch with me, get in touch with Alicia Taylor. I do lending in California, all of California, and all of Nevada. So
awesome.
Yes,
I didn't know
absolutely.
that you
Absolutely.
You go to Nevada too.
Nevada too.
Awesome. I learned something new about you.
Yes.
So back to our element. So once they have their 3.5% down, did you talk about that? You didn't talk about that.
So the 3.5% down payment, like I said, that's geared towards FHA. And then there's a 3% program down as well with conventional Fannie Mae, Freddie Mac. So that is available. But again, depending on your lender, you can talk with your loan officer, your loan originator, and definitely they will gear you into that place of where you want to be. So again, a lot of clients, I think they have that, but I don't have enough money down. You'll be surprised at when you start saving and when you start looking at other resources. As I mentioned, gifts are very prevalent and are very much.
Talk about gifts.
Yeah, so the gifts would be someone that would gift you over some of their funds, their assets, right? Mm-hmm. So your parents, your sister, your brother, someone in your immediate family to gift you over some of their funds. Now, they have to show that they can afford to gift it.
Yep.
So if you've got, let's say $10,000 in the bank and you want to gift your brother, $9,999, well, you said you had $10,000. Let us see it. So we're going to ask for your bank statement.
Yes.
And then, she can afford to give it, but you might only have, pennies left after you give your whole thing, but you've gifted it, and that's what we require. So yes, people have to check the resources. You never know what gifts you have or what monies you have available.
Yeah, I've our family member has done that, so I've seen that, and it works out if y'all work together as a family. You get your money back. The other person will gift you back.
Well, we don't want to say all of that, but at the end of the day, and I think a lot of the times too, people say, well, Shirley, I have this money underneath my mattress. Okay, mattress money doesn't count.
That's
the money in the shoebox doesn't count.
No, right.
The money in the bank is what counts. So we have to see that and verify that. Absolutely.
So if somebody came up to you or called you from here and was like, Shirley, I'm ready. Yes. I want to buy a house.
Yes.
So what would you tell them? Go.
Let's pull your
Slow
credit
it down
report.
so they can write it down, because we are going to teach. You're teaching them. I'm just asking you as a student. Okay.
Absolutely.
How? Because if I wanted to buy a house, like I'm my stance, because I rather live out in another country.
And of course you would. Some European country. I know.
Yes. So or Africa for that sake. So I'm more home. I am more entrepreneurs.
Yes.
I'm more of home-based business or even corporate. Yeah. And you are home ownership, and I love that about both of us, because tell me, because how, if I wanted to know how to buy a house.
Yes, absolutely.
Give us from A to Z.
Yes.
Give us your elements.
Step 1, call Shirley. Okay.
Yep. Give us your number.
Once you've called me, then what we're going to discuss is your credit. That is step 1. And again, I can't stress it enough. Stay ready so you don't have to get ready.
Yes.
So even if you didn't think you were ready to buy a house in the next 3 to 6 months, still get your credit report. It is so very strategic and wise and smart to watch your own credit.
Yeah.
Don't let anyone pop up things on your credit report that you have no knowledge of. So get your credit reports, plural, get all 3 of them. Mm-hmm. So I'm ready to buy a house. Okay, step 1, get your credit reports.
Yeah.
Review your credit reports, see what's on there. And I will go ahead and give you another little tidbit. Don't worry so much about the collection accounts and charge-offs when you're purchasing a house, especially if you're going to use the FHA lending. Okay. And that's why I push FHA for those first-time home buyers who may have the credit is not as where they want it to be, and they can't get the collections removed, they can't get the charge-offs removed. Well, then what you want to do is start looking at the collection and the charge-offs and make sure they're not exuberant balances, or make sure they're not student loan charge-offs. Student loan charge-offs, they're really a government thing, which means that government loan you may not qualify for. That FHA loan you may not qualify for if you've got student loan collections or charge-offs.
What's the FICO score needed right now to qualify for the FHA?
So you want to look at a 640. Now, we do have lenders that will go down to 600, but that means your that means your interest rate is going to climb.
Higher. Yeah.
So I talked about under 3%. You might be over 3% if you've got that 600 credit score. Okay. And then your 3.5% down payment may be a little bit higher. So it just kind of depends. But we have lenders that do all kinds of things. They have those little niche lenders that will lend. But the first step, credit reports. Let's look at and see what's on your credit reports. The second step, your assets, your reserves, your cash in the money. Your cash in the bank. Because I was thinking about money in hand. But no, it's the money in the bank or the retirement funds or the gifts that you may be able to receive for someone.
Got it.
So that's the second step. The third step is then let's go ahead and apply for the application of the loan, I should say, the purchase loan, right? Yeah. So you want to apply to make sure that you can get pre-approved. So after you've done your credit reports, after you looked at your assets, third, let's get you pre-approved. Right, let's go ahead and pull your application, and let's put the application together to see exactly how much you do qualify for. And income, I cannot stress it enough. If you're talking to me and I ask you, how much money do you make on a monthly basis? Mm-hmm. I make $12,000. Okay. Do you get paid bi-monthly, bi-weekly? I get paid twice a month. So is that bi-weekly, or do you get paid on the 1st and the 15th? I don't know. I think I get these checks like twice a month. So is that bi-weekly? Yeah, that's bi-weekly. Here's a little tidbit. Bi-weekly is not bi-monthly. Wow. Bi-weekly is just that. You're going to receive 26 paychecks. Bi-monthly, you're going to receive 24. Mm-hmm. That's a 2 paycheck difference. And that a lot of the times is a make or break on what you qualify for, right? Mm-hmm. So you got to know how much money you make. Like, I'm not going to, put my clothes on, brush my teeth, and go to the office and not knowing how much money I'm making. On a monthly or a weekly or annual basis. Right. You would need to know what you're making. And it's not a guesstimate, but it's what are you making so that I can assess what your pre-approval is going to look like. So when you're going out shopping for these homes, you're not shopping for a $500,000 house, and really your income, because you're missing 2 paychecks, really says, okay, now it's really $450. So that's a huge difference, right? Mm-hmm. So you want to get your pre-approval and then go shopping with your real estate agent.
So we got a question from the audience, from our viewer. They want to know if there's any programs for seniors over 60 or like a no down payment program.
Okay, so they don't really look into age per se, because that's kind of more of like a ECOA violation or age discrimination. Yeah. So the only type of age-related programs that they are, though, they are reverse mortgages. So if you're over 62 years of age, you would be able to qualify depending on, again, yes, you do have to qualify credit-wise and income-wise with the reverse mortgage. Now, reverse mortgage are, again, for those who are over 62 years of age. So when you ask the question, is there anything or any programs geared to 60 and over to purchase or even refinance, there is a reverse mortgage, and that reverse mortgage is exactly what it says. It works in the reverse. So that means your balance is going up versus it's coming down when you make a payment. Absolutely. But you do need to be 62 years of age or older, and you can purchase a home with using reverse mortgages. But again, the myth about the reverse mortgages, what is that? Anybody can qualify. No, your credit would still need to be on board because it is an FHA government loan. So we're back to that 640 criteria. And there may be a couple of lenders out there that will go lower than a 640 on an FHA or a reverse mortgage, but it's still a government loan. So you're going to follow along with a lot of the FHA guidelines.
Some people are a little reluctant on the reverse mortgages. I don't know because I don't qualify for that loan. So I don't know.
You're not 62,
not yet, girl.
Stop it. No.
Not yet. So I don't know much about the program. Sure. So can you speak a little bit on it? Because I have heard a few horror stories with this program.
So again, with the reverse mortgage, you start with being 62. The thing about reverse mortgage, I think the biggest, and I wouldn't say drawback, but if for lack of a better word, if you're thinking about having a reverse mortgage, right? The only thing that kind of sets you in a different mood is that balance is going to keep doing this. So if you start off, let's say in 2021, and you start off with a reverse mortgage that's $300,000. You know, the following year it's going to be maybe $350,000, and on and on and on. And the life expectancy right now, I believe for women, is the age of 86. So just imagine if you're taking out this mortgage at the age of 62, what your balance is going to look like by the age of 86, you know. So
wait, what's the point of a person wanting to do that? Like to have a home really bad? Like
a lot of the times what we find with people who do reverse mortgages, there's a special type of client and a special type of loan program that goes with it. We find a lot of women or men, that don't either have offspring, they have no children, or they aren't married and they're by themselves per se, and they don't have anyone that they really want to leave the house to. So they'll say, well, I'm on a fixed income. Why not I use this income for other things besides a mortgage payment? But I like the home I'm living in, and I don't want to leave it. I don't want to go move to an apartment. I don't want to go move to a senior citizen.
Investment.
None of that. Right. So they want to stay in their home, but they're on a limited fixed income. So the next best thing in their minds is that, oh, hey, well, you know what? I can stay in my home. I can travel. I can purchase other things.
I get that.
And it's all without having to pay a mortgage. But another myth is you still have to pay for your property taxes and homeowners insurance. And those are the two things I think a lot of homeowners tend to forget.
You still have to pay those. Hopefully you add it in there monthly so you don't have to pay it all at the end of the year, because that could be a little overwhelming.
But it's up to you if you have a mortgage payment. I shouldn't say it's up to you. You won't have a mortgage payment, but you're still allowed to make those mortgage payments monthly if you want.
Wouldn't it be smart to do that?
Well, sure.
Because it doesn't sound like it becomes an investment property when you get a reverse mortgage. It's just like, in the meantime, because you're not leaving it to anybody. So what's the purpose of it?
Yeah. So again, like I said,
I don't know. Help me understand it.
You know, it's like I said, it's a special person that has a special need. And if their need is, I don't really need to leave this property to anyone, but I can stay here without paying my mortgage, then they'll just stay there without making the payments. You know,
Wow. Until they just.
Yeah. And so one day we all end up leaving this earth. Yes.
And it just goes on to be whatever. Okay, so finish. That was awesome. So you say prepare your credit, get your credit report, make sure we know what we take home.
Your income is so key.
And your credit score needs to be 645?
640, but there's
640.
let's focus too heavily on these credit scores, because there are lenders out there that will do 600, and there are lenders out there that will have special programs that if you have a 600, then this is what your interest rate is going to be. This is what your down payment's going to be. So there are lenders that will do the lower scores.
Okay.
Yeah.
So we want to let you guys know that if you want to call in and ask questions and talk to Shirley, you're open to having conversations,
yes,
right?
Absolutely.
Call us 323-815-4204. 323-815-4204. Call us, because we're getting questions, and this is awesome. It's getting people interested and inspiring people. I'm all tongue-tied because I'm smiling from ear to ear.
Sure.
This is a topic that is definitely needed, because we're all about generational wealth.
Yes.
And we're about that. Like that's what brings us, makes us really good friends. That's what we have in common. We both understand and want that.
Yes.
You know, so
absolutely.
Teach us. Keep telling. So we have another question before we move on with the rest of your elements. Does a bankruptcy under 10 years owed affect the chances of buying a house?
So yes and no. It needs to be over 3 years, or for VA, 2 years.
Okay, so it doesn't affect them then if it's been 10 years, so they're now clear to
buy whatever.
To buy. Awesome.
Yes,
Whoever
absolutely.
asked that question, go look for a house. That's so cool.
Absolutely.
That's cool. Okay, so with that, so I don't. Sorry to keep cutting you off, but it's so much is coming through. So finish on.
Home ownership is huge. Home ownership is huge, and especially right now. I mean, these are historic low interest rates. I mean, like I said, take it from me. 27 years ago, I was selling 10, 12% like it was like I'm selling Fendi bags or something. Everybody wanted them, right? So I tell you,
I sell them.
Yeah, hey, so with them being so just incredibly low, one thing about it, as I've traveled down this home mortgage banking, loan originator, account executive, broker, since I've been many homes, and traveling down this path has really taught me so much. But the one thing that sticks and holds in my ear dear is that really housing, this whole housing industry is pretty much what keeps this economy turning. Yes. It's what stimulates the economy. It's what moves the economy. It's what, when the Federal Reserve Bank says, hey, we're looking at inflation, drop the whole mortgage interest rates, drop them, because that's what keeps everything in balance and keeps it turning. Yeah. So to hedge off inflation, we bring up home ownership and interest rates, drop them. So when the Federal Reserve Bank meets, right, and they discuss what is the new prime rate, we're always listening. We got our ear to the streets when they're listening. What's the prime rate going to do? It's going to stay the same. Yay! Everybody's like so excited, right? So the thing about being in the mortgage business, it kind of gives you that extra excitement about life and the economy of like, what are we really going to get ourselves into money-wise? Are we going to be a poor nation? Are we going to be a rich nation? Right. But it's just fascinating to think that I'm in an industry that's really sparking the economy, yes. and it's powerful, and it's powerful right now.
You're changing lives. Yeah. Not only are you sparking the economy, but you're also changing lives. You are helping people dreams come true.
Isn't that what they say? The American dream, home ownership, Yeah.
Right, and with us not given the fair chance or not just being in a position as Black people to buy a house, I think now is our time. If all of your ducks are in a row, if you're following the elements that Shirley has given us, you can purchase a home if that's something that you want. But whatever it is, make sure it's generational wealth. Yeah. Home ownership or a business, an empire, something that you can leave to your legacy so your children don't have to work hard to figure it out. They can just follow along and make it something that the family buys into so you can leave it. So
absolutely.
With that, so now we know our credit.
Yes.
We know our credit. We save money.
Yes.
So then what's our next step? What do you say?
And you get pre-approved, And like I said, you definitely want to get pre-approval. I mean, it's one thing to, drive around and search around looking at all these different houses. But if you're searching around, driving around, looking at all these houses, you really don't know what you qualify for. Right. You're wasting time and money, right? Yeah. So you definitely want to know what you qualify for. And I cannot stress that enough. And being pre-approved is what you're looking for. Pre-qualified, pre-approved. I know we use those terms interchangeably in the industry, but you really want to try to get pre-approved because that means I've seen your credit report, I've seen your bank statement, statements,
you've seen everything,
and I've seen your paycheck, right?
Right.
So, and I'll be remiss if I don't talk about the pandemic. And right now in the COVID season, having a job that we can verify is key. It's key. Do not get upset with your lender or your broker when we say, oh, you applied on January 1. And you gave me your pay stub. You gave me your pay stub on January 1. And then we don't close until, January 30th. And
now you quit?
Well, no, or you quit or you get fired, So don't be upset on January 1 when I ask you for 2 pay stubs, last year's W-2. And then on January 30th, I ask you for 2 more pay stubs or at least 1 more. And then we call to make sure you're really at that employment agency. Please don't get upset and say, well, I gave you my pay stubs. Yeah, but that was 3 weeks ago. We're at the closing table. We need that pay stub now because for fear of everything possible. Yes, there are some people who, sadly enough, lose their job, or they quit their job and go to another job.
Right in the middle of trying to get
of a transaction.
Yeah.
Yes.
We make that mistake. That is very good information because people will go buy a car.
Oh, they will.
You're like, aren't you trying to buy a house? Then why are you getting your credit pulled?
Buy a car. They'll go buy their living room furniture, their bedroom set, and their basement set if they have a basement. They'll go buy all this furniture on credit. Yeah. Or they'll use that money that they thought they had set aside in the bank. They'll use that too.
Yeah.
Yeah. All of these things, I know we're kind of like jovial saying it, but it's the truth, people.
No, it is.
After 27 years, I've seen a lot. I won't say I've seen it all, but I've seen 99.9% of it. So again, do not go out and buy anything new. Don't have anyone run your credit. And don't spend the money that's in the bank for the down payment. And whatever you do, try to stay employed.
Please.
So
you can buy the house.
Yes, because and I mentioned the COVID season because they are super duper sticklers about employment in the COVID season. Now. Oh, they will call your employer 2 and 3 times before their transaction is closed. Trust me, they will. And they will need to make sure that you are still employed. Or if you're one of the clients that we have that are hourly pay, and you were on a 40-hour full-time shift, and then all of a sudden, because of COVID or whatever reason, now you're not on that 40-hour shift and it's cut in half to a 20-hour shift. Now you've just changed the trajectory of all of this. The dynamic has changed. Sure. And now you have a whole nother issue to contend with. Yeah. Absolutely.
So is it a seller's market or buyer's market?
A seller's market.
It's a seller's market.
They're buying houses out here. They're buying houses. I tell you, they are buying houses. Yes, that they are. Absolutely.
That's awesome.
Oh, yeah.
But so I know in our neighborhood, like the houses are just like sitting, like if they they only stay on the market like one day, 1 or 2 days. You call and check, and you go back by, drive by, or walk by, it's gone. It's like
gone.
It's actually been cool to have been in the city for so long and watching the gentrification. Let's talk about that though. I always I watched Inglewood gentrify like right before my eyes. I've been there 15 years, and I get both sides of it, but it gets to the part where it becomes now the community. It's not the community that it used to be, and people come into the community and try to take over the way the community is ran and
the lifestyle of the community. Sure.
Yeah,
the culture.
That's the culture, and that's what I don't like. Don't come in. You can come in and we can all be together, but don't try to come in, bang and take over our
strong arm.
Yeah, I don't. Sure. That's when I don't like gentrification. But yeah,
it's flourishing. It's flourishing. And I don't want to skate too cross the line and talk about it on a real estate perspective, because although I am a realtor as well. I don't want to skate along those lines because I'm here to talk about mortgage financing.
Yes.
The one thing about it is you will find oftentimes, and like in the city of Inglewood, I mean, where everything's expanding and everything is building up.
Yes.
You know, everyone wants to come in. Everybody wants to come in from all different type of backgrounds, cultures, races. You know, they all want to come in and get a part of this pie, right?
Yes.
So what you'll have to do is, yes, it may be a bidding war, but if you see this property that you want, you know, this is my property, this is the house I must be in.
Okay.
Stick close to the grind with your real estate agent.
Okay.
Make them negotiate on your behalf to where if the listing price is, let's say in Inglewood, I mean, what's the common median price now? 600 almost or higher. Yeah, you know. So I'm just like, it's, you know, really seriously. So, you know, let's say their listing price, not what they'll end up selling it for, but their actual listing price is $700,000. You may have to bid that $725,000 to make it your property.
Yeah.
You know,
got to be a little flexible.
If you want these properties, you must go out there. Don't let them bully you and strong arm you. You know, you come in, you ask for what you want, but get that negotiator, that realtor that's going to push for you on your behalf. But make sure, once again, you have your resources in a row.
Yeah, the down payment.
And you qualify for that.
I dropped my pen.
Absolutely.
What about, I dropped my pen. What about the I was twirling it. What about down payment?
Yeah.
Because the down payment, you talked about 3.5%. So that is much lower than a lot of people always suspected. So talk about that.
Yes. Well, and I mean, and like I said, that's geared to your FHA program. And there's not a lot of sellers, and being that this is a seller's market, there's not a lot of sellers that are interested with your 3.5% down. They typically want to see more. They want to see that buyer that is so-called more qualified because they think that they'll stick and that they won't run away, you know. But again, that's part of that whole strong arming thing I talked about, you know. If you are an FHA candidate and that's what you want to do, then you need to show all the other resources that make you a viable buyer for this seller. You know, if you're going into an area where the seller says, well, we're over here with $1 million properties. Well, most of the time, you're not going to be buying $1 million property with the FHA program, and there's nothing wrong with that.
Okay.
But what I'm saying is, you want to make sure that you have all of your resources in a row. So if you're wanting to buy a certain property and you're only doing that 3.5% down payment, no problem. But make sure your other, what we call these qualifying other items, make sure they're lined up so that they can see them. You've got the assets, you've got the credit, you've got the employment stability.
Okay.
You know, show all of that.
It all lines
package
up.
it together.
Got it.
Absolutely.
Okay.
Yes.
So, and now
the compensating factors.
So now they got they have their down payment. So this is where they call you?
Yes. Absolutely.
So tell us, how do we contact you?
Yes, you can contact me at 818-720-7575. Or 818-720-7575. Or did I say 818-720-7575? And we can discuss a lot of different other programs because, again, it's not just the one-step process. It's not the two-step, three-step, but those are the preliminary things that you want to have lined up. You know, there's other items that we don't have time to talk about here, but there's other programs and niches that you may fall into, you know, co-signing, co-borrowing. You know, we didn't talk about, you know, the first-time home buyer who's a younger person that's 25 years old and they may need a co-borrower, a parent, you know. So there's other programs and other items and niches that we can talk about to structure your loan so that maybe you can get into a home. And then, of course, my all-time favorite, the refinance, you know. Refinance.
Speak on the refinance.
Oh, my gosh,
that's
this is
your
the
favorite.
refinance craze right now. It is
That's
so,
your fave.
I am a refinance queen. I must say that.
Okay, there you
Pat
go.
my back.
Speak on it.
But I mean, refinance is for all kinds of different things. And right now, the biggest question that I get when I have a client that calls and says, wait, should I refinance right now? If you're going to save $200 to $300 a month, if you're going to save money through the long term, for instance, if you have a 30-year note right now, and that you're thinking, well, I may not be here for very long. I might sell my property soon because I know it's a seller's market, so I might be selling pretty soon. So should I refinance? Well, then you have to ask yourself, what is your definition of I'm not going to be here that long?
Okay.
If you're not going to be there for past 12 months, then probably not refinance. But if you're going to be there 3 to 5 years, refinance if you're going to save $200 to $300 a month. It'll be worth it, especially if your closing costs are not exuberant. So now you got to kind of balance those two things. And again, you'll have to call me and we'll talk about, the expenses or the closing costs. Yes, there are closing costs on a refinance. And again, I know there's a lot of commercials that say, oh, there's no closing costs and all this kind of stuff. We can talk about that over the phone as well. But trust and believe you me, the closing costs are in there. You might not see them, right? Okay. So it goes along with your interest rate.
And so to piggyback off of that $200, $200 to $300 that they could save, make sure that they're really saving it.
Exactly.
Because if you're not really saving it and you're using it for something else, then it's not worth refinancing because now you're creating more debt.
Or unless you're using that money to pay off your credit card bills.
Okay, that's different.
Yeah.
But
right.
You want to really use it to save, to elevate to the next, to have it as a cushy.
Absolutely, especially if you have children, because we talk about generational wealth.
Yes.
So you want to be able to set that $200 or $300 aside for your child's bank account, right? Or at least half of that, right? Yeah. You want to be able to, with Ryder, I won't tell you all the man's business, but he'll tell you himself.
He's a little kid
my
actor.
bank account is right over there on the corner, right there. I see it. It's that red building in that brown. That's that Wells. Yeah, I know. That's my bank account.
Yes.
So every month, I have a certain amount of money that goes directly to his bank account without me seeing it, and it actually happens twice a month. Yeah. So what I'm saying
is, he works
and he's a working actor.
He's her son, Ryder.
He's a working
actor. He is like,
for that
so
account
cool.
is a separate bank account because you can't touch it since Gary Coleman law came into play. That Coogan account, absolutely. Those accounts are set aside for those child actors. But nonetheless, again, you talked on a very important part, going towards generational wealth. You want to take that money that you're saving monthly from refinancing and put it aside. Yes. And if you don't do all the whatever you're saving, all 100% of your savings, at least do 50 to 60% of that.
Yeah.
So you can look back and say, oh, this is why I refinance. Exactly.
Yeah.
Exactly.
Yeah. Otherwise, it becomes you're taking advantage of your property.
Well, and they say that you're pretty much living off your property.
Yeah, and that's it's supposed to be to thrive.
It's your asset. It's the biggest, greatest investment asset that you can have probably as a homeowner, as a person. In America. That's why they call it the American dream, I guess,
Right.
Yeah, sure.
So is there anything else that you need to add? So did you give us a rundown of how to purchase a house?
I did.
Awesome.
I did. Yes.
Tell us how we can find you. I know you also, we can speak on it before we go. You're also a writer. Yes. So your passion, this is your 9 to 5. Although this is your 9 to 5, this is your bread and butter.
9 to 9, but okay.
9 to 100.
Okay.
You really love writing.
I do.
And so I could not let this go without us talking about Love Plus Us.
Yes.
So the movie, talk about that real quick. Talk about your passion project.
Yes, our passion project. And I must give a big shout out and high five to my writing partner. Her name is Monique Young. Monique Young.
She has the same initials as me.
Absolutely.
That is so cool.
And she definitely
I have a cousin named Monique Young.
Okay. Well, and this Monique is probably just as fabulous as your cousin.
Yep.
Monique is from my hometown, Kansas City, Missouri. Although she has moved from Los Angeles as of late last year. Okay. But nonetheless, we get together all the time over the phone or FaceTime or whenever we can make time, and we continue to create our project, our baby.
Awesome.
She and I have written I don't know how many different scripts and and reels and tidbits and everything, but we write constantly. That's the thing about a writer; they're always writing. Yeah. And our latest project is a project that we hope to shoot for an actual movie film, a full feature. It is called Love Plus Us. And not to give it away, but it is very relevant to this modern time. It's talking about all things suicidal and multiple personality disorders. So that's our main character. And hence the title, Love Plus Us. So there's a lot of intrigue and twist in this film, and we've recorded and filmed on the green screen in the COVID season a trailer.
You did?
And we did, and it is absolutely phenomenal. I must say so much. Okay,
I can't wait to see it.
This mic, but yeah. So we are looking for distributors, producers, to pretty much put the project on the big screen. Mm-hmm.
Cool. Well, you didn't put it out there to 7,000 subscribers, so who knows? God is good. He's real.
Yes.
You guys, it's been a very, very emotional day. It's been a beautiful day. Enjoy America. Thank you for coming through. I knew we weren't punks. I knew we had it in us.
And for what it's worth, around this surrounding area, I can say it's been calm.
Yes.
There hasn't been any rioting, looting,
no, it's just peace.
Turmoil. Yeah.
It's been peace.
And I'm very proud of Los Angelinos.
Yes, we are, we're just happy. Mm-hmm. Black people, it's your time. Get your ducks in a row. I just showed you how what it takes to buy a house. If you want to, we're going to have a show about building a business as well. So we are all about generational wealth. If that's what you desire, it is just a dream and it could be achieved. You can manifest it. And I'm here to show you. We are here, you guys. We are season 2, episode 2. Thank you for joining me on episode 2, season 2. I would love to continue to have your support at Girlfriend's Guide to Life podcast. It was actually Girlfriend's Guide to Life on Facebook, and it's spelled the way it sounds. And on Instagram, it's Girlfriend's Guide to Life, LYFE. Find me, hit like, send me a message. I love you guys. Thank you for tuning in. Shirley, thank you for coming on the show and teaching us about home ownership. Felicia, thank you. I love you guys. I'm tired. See you in 2 weeks. Peace.